Welcome to Crossroads Consulting. This is Jeff Rhodes, Billy Rhodes, where we help companies outsource, grow, and protect their assets. This morning we have a special guest, Jeffrey Katz with Live Oak Bank. Welcome, Jeffrey.
Thank you.
We appreciate you coming on, spending some time with us today. Talk about what your background is and a little bit more about Live Oak and especially the SBA programs that are out there today. So if you would kick it off, tell us a little bit about your background.
Sure. Well, thank you for having me on the show today, and I'm excited to be here and talk about all things SBA. So a little bit about myself. I've been doing SBA lending, involved in SBA lending since 2000. I originally from the Chicago area, and I started out as a SBA underwriter when I was in Chicago. So got a good sense of the fundamentals of the program when I was an underwriter, and then majority of my career has been on the origination side. So and here at Live Oak, so we do all things SBA. We've been the number one SBA lender in the country by volume, by dollar amount. I believe it's for the last 5 or 6 years now. Last year we did about 5.3 billion in SBA loans. So it's not something that it's not something we dabble in. It's something that it's really our main focus. And we lend to all different types of industries. We have the bank. We have over 35 different what they call verticals, and within each of these verticals, there's a team of lenders that specializes in. Let's say we have a vertical for solar. So we have a team of lenders that's all they do is lend to solar, projects in the solar industry. We have a vertical for wealth advisors, individuals who want to, need financing to start up a wealth advisor practice or acquire one. Veterinarians, doctors, attorneys, so many different verticals, which is great because, if I were to get a loan request for something in the solar industry. I have over 20 years of SBA experience, but I've never done anything in the solar industry. I could tap that group to help me put that transaction together. So it's really a value added for us to go out in the marketplace. I currently sit on the generalist team of the bank, so I work on all types of transactions. Within all different types of industries. So that's kind of the overview of our platform.
Sure. All right, excellent. Hey, Jeff, tell us about the SBA program. I know somewhat about it, just enough to be dangerous, but give us a foundation on the SBA program, maybe how it got started, what types of businesses size are eligible for it. Just give us a foundation on what the SBA program is all about.
Sure. So going back to its roots, I believe it started back in 1952, and the program was really designed to bring capital to the main street. The focus is on Main Street businesses, having the ability to access capital for, certain transactions that are, may not qualify for conventional lending. For example, a majority of the transactions we do are partnership buyouts, business acquisition finance. And a lot of times with these, these transactions, there's not a whole lot of hard collateral to secure the loan. And that's one of the great things about the SBA program is you're able to obtain an SBA loan that could potentially be unsecured. As an SBA lender, we are required to look at all available business and personal assets as collateral. So once we've captured all available collateral, if we have a $2 million shortfall on an acquisition loan, that's okay. That's what these loans were designed for. Basically financing that more or less would not qualify for a conventional loan. And then we also do a lot of startup financing for franchises. That's another great, another great product that we have for franchise lending. And again, just kind of circling back to the program itself, really designed for Main Street businesses and really designed for transactions that wouldn't necessarily qualify for your conventional financing.
So what size loans are we talking about? How small to how large of loans can we go?
So the SBA 7A program, which is really our focus, you can go up to $5 million. That's what the program currently maxes out at. And then you can go as low as, so the floor, there's no floor for the SBA. I mean, you can go as low as probably 10,000. I would say the floor is really, it's really set by the individual lenders. So for example, we have an SBA Express group, which handles more, those smaller size transactions of $500,000 all the way down to $10,000. And those are processed to our Live Oak Express group. And then I process, as a generalist, I would work on anything 500,000 to 5 million. So,
okay. So whose money is this?
That's a great question. A lot of people, seem to believe that the money is lent directly by the government, which is actually not the case. So it's the bank's money. It's the lender's money that is facilitating the transaction. So how the SBA, how the SBA comes into play is they guarantee 75% of every loan that a lender makes. So it's really, the SBA's role is really more in the background, from a borrower's perspective, and then the lender is the one making the loan.
Okay, so Live Oak Bank does have skin in the game then. On
Yes,
this.
yes, yeah.
Take us through the underwriting process. You mentioned in your background you started as an SBA underwriter moons ago.
Yeah.
But obviously the underwriting process is where the rubber meets the road. If we've heard from other forms of alternative financing, investment bankers, and a lot of it has to do with the financials. But from an SBA perspective, because you're dealing with unsecured loans in many cases, I'm definitely curious to know what the underwriting process is, what information is required, what do you look at, and how do you advise the prospective borrower?
Right. Great question. So let's walk through the process, the underwriting process. From just an overview, our underwriting process takes about 7 to 10 business days. I think the average in the industry is probably 10 to 14 business days. And, what we do is, we'll gather the underwriting package. So that's, essentially we'll get tax returns of the business. Let's say it's an acquisition. We'll get tax returns, financials of the business being acquired. And then we'll also get a package on the buyer. Last 3 years tax returns, personal financial statement, resume, and really just learn more about the buyer. Want to make sure that there's some transferable skills there, if not direct experience, to show that they can successfully operate the business that they're looking to acquire.
Is there any kind of a personal guarantee since this is unsecured?
Yes.
There's got to be some protection for the bank on that.
Right. So there is a personal guarantee. The depending on the structure, the ownership structure, the SBA has their policy is anyone who's considered either a key employee or has greater than 20% ownership must personally guarantee the loan.
Okay.
Yeah.
So in the underwriting process, where do you find things getting bogged down into the weeds and potentially stopping a transaction?
So there's a couple areas that I usually focus on that could be we just want to make sure that it checks the boxes, right? So obviously what we call debt service coverage, want to make sure that there's sufficient cash flow being generated from the business to service the proposed SBA loan. For example, let's say it's a 1.5 times debt service coverage requirement on a deal. For every dollar of debt that the bank lends, we want to see $1.50 in free cash flow from the business that's available to service that dollar of debt. So the debt service coverage is very important. Buyer profile, making sure that they don't have any foreclosures, bankruptcies within the last 10 or so years, good credit score. And then also, the one thing we also have to look at is the SBA requires us to do a background check. So there'll be a questionnaire about any criminal, past criminal records. Not necessarily something that could, be a deal breaker. Just something that we have to vet and explore. And then I would say, for me, probably the most important piece is making sure there's a great fit between the buyer and the business that they're acquiring. If they have direct experience, that's great. If they don't have direct experience, okay. Do they have any transferable skills? Have they managed employees? They have management experience, previous business ownership experience. So we want to make sure there's a good fit, a good marriage between the buyer and the business.
So you mentioned startups.
Yeah.
They may not have. Are these startups pre-revenue? I mean, where do you draw the line on startups?
Yeah. So with franchise startups, they are projection based. So these are typically, they're new franchise locations where a franchisee signs a franchise agreement for, to open a franchise. And and they're truly just projection based loans because we don't have a historical accounting. It's all based on projection.
Yeah, that's interesting. So you only do startups if they're a franchise.
That is correct. Now, the SBA, from an SBA perspective, they do allow lenders to finance non-franchise startups. Live Oaks, we've made the decision just to stick with most, just franchise for startups. We do not do non-franchise startup lending.
Gotcha.
Yeah.
What type of interest rate are we looking at on these loans?
It really it really depends on the size of the deal, the strength of the buyer. What I will say with that is they are tied to Wall Street Journal Prime plus a spread. So and they are variable rates. They adjust every calendar quarter. Typically with conventional loans, you'll find fixed rate financing available. Not so much in the SBA world. So.
Gotcha. And how long are the terms typically?
It really depends on the use of proceeds. So if let's say you have a business acquisition, a partner buyout, or a startup franchise, you're going to be looking at probably a 10-year term, fully amortizing. However, let's say you have there's a real estate component in the deal, or you have an existing client, existing business, they're looking to just buy real estate for their, to house their company. We can do 25 years on real estate.
So you've mentioned a few times acquisitions. To qualify for an SBA, you don't have to be acquiring a business, right? You could use it for working capital expansion, right?
That is correct. So it's not just designed for, it's not just business acquisitions, partner buyouts, franchise. So there's a number of different, avenues you can take with SBA. If you need a working capital loan, we also do debt refinance. So if you're looking to refinance a mortgage, or if you have equipment loans that you're looking to refinance, that's also an option as well. Yeah. Mm-hmm.
Okay.
Yeah.
What is the decline to quote rate in borrowers, applying for SBA loans? What's the percentage, the win percentage versus the unsuccessful rate?
As far as the SBA statistics?
Yeah, maybe you do 100,000 applications for SBA loans. How many of those actually go through? Is it 50%, 30%? What's the win ratio on SBA submissions?
Unfortunately, I don't have the statistical data on that, so I can't comment on that.
If you had to guess, not everybody, it's not 100%, right? So it's somewhere less than 100% of those seeking an SBA loan actually succeed.
Yeah, it really depends. I don't even know if I would be able to guess, to be honest with you.
Okay.
I don't know what the statistical data is for, not only the SBA, but for individual, banks. I'd be very hard pressed to guess it.
Okay, fair enough. But it does sound like the SBA loan process is easier than traditional bank lending or even alternative finance avenues because of the secured nature. It seems like the other forms of lending are much more focused on secured financing of some sort beyond the personal guarantee.
Right. So it's different. I think you'll find compared to when you compare an SBA loan to a conventional loan, the two main differences you're going to find is the down payment requirement, and then the term, and then the collateral requirements. So I guess there's three differences there. So as far as the down payment, and these are just estimations, the SBA's the program's minimum down payment requirement currently is 10%. On a conventional loan, you might be looking at 20 to 25% down.
Oh.
So significantly more of a capital requirement from a borrower. And then the terms are going to be, as far as the term is going to be a lot shorter with a conventional loan. It may even have a balloon feature where, with the SBA, there's no balloon. If it's a 10-year loan, it's a 10-year amortization. But you may have a conventional loan. It could be a 15-year term, but it balloons in 5 years, which means that, or a 15-year amortization ballooning in 5 years, which means that the whole thing is due in full in 5 years, and then you have to either pay it off or try to renew the loan. So it gets a little more involved on a conventional loan. And then the last thing is with regards to collateral requirements. Conventional loans typically want it fully secured. It could be, depending on the use of proceeds, could be challenging, especially if it's an acquisition where there's not a whole lot of hard assets.
All right. What types of loans have you been involved in recently? Are there any examples that you can provide us?
Yeah, I mean, I have been doing mostly business acquisition finance and franchise lending is what I do. Startup franchise lending. I've got a law practice acquisition right now that I'm working on financing as an example. I've got a medical practice that's I'm working on financing that for an acquisition. Just really got a bunch of different things in the works right now.
And what kind of information do you need on the targeted acquisition? Because that's obviously part of the equation,
right?
Is it pretty much the same underwriting process, or is there some additional information that you need?
No, I think it's pretty much the same underwriting process for a targeted acquisition. Again, just the last 3 years tax returns of the business that to be acquired, and then we'll just analyze the numbers. And
what are some of the things that kill these loans, especially with startup folks? Even whether it's a franchise or not, they might not have all their ducks in a row. What are some of the deal killers on these things?
Usually it comes down to, quite honestly, debt service coverage ratio. A lot of times we just can't get there, which could be a combination of, the seller's just asking too much money for the business. Not always, but a lot of times that's what usually attributes to insufficient cash flow available to cover the debt. And then on franchise startups, a lot of times that could be, lack of experience, management, whether it's business ownership or management experience. There's that. And then, I've had a couple times where, buyer comes and there's a bankruptcy that they had, personal bankruptcy where they had like 5 years ago.
Right.
That's a really hard, the very hard hurdle to overcome for most lenders,
right,
if it's within 10 years. So
let's go back to the debt service coverage ratio. Now, with most of these businesses that they're looking to buy, I mean, there's been an evaluation done on them.
Mm-hmm.
So, I mean, and people still ask too much more than what that valuation says, or?
In some cases, yes. And in some cases, sometimes evaluation has not been done. There could be a broker evaluation. And sometimes, I work with brokers who, some of them, they'll tell me up front, the seller wants this, which, I feel is too much, but this is what the seller's looking for. I think this is the number that they're realistically should expect. So yeah, and I don't really get involved in negotiating with the seller, but I do think that, the brokers have to be mindful of, keeping the seller happy, but also being realistic with the price.
Right.
So,
Are you always looking for brokers to work with?
Yeah. I work with a lot of business brokers, loan brokers. Mm-hmm, absolutely. Okay. Yeah. Commercial real estate brokers.
What has changed over the years with the SBA program? Is it gotten better? Has it gotten worse? Is it easier, harder? Size of loans gotten better? What's you've been in it for a while, so what's changed and where are we today with the SBA program?
So I would say over the years, there have been a lot of positive changes. For example, I can remember when the down payment requirement was 25%, which is
Yeah.
those days were it was difficult because the programs designed for Main Street businesses, and 25% could be a lot of capital for a Main Street business to part ways.
Sure.
So I think the 10% change was a welcome adjustment to the program. And then I also do remember when the SBA program only went up to 2 million. This is probably going back 10, 15 years since they've changed it. But now we're at 5, and the program caps out at 5 million. And I do know that there's been talk about increasing it to 10 million. I don't know if anything is in Congress right now for that. It's all just been kind of rumor at this point. So,
what's it been like the last couple of years? Have you seen a spike up in applications? I know a lot of like private equity, alternative financing, interest rates play a big part of it. The economy plays a big part of it. I'm sure you guys are impacted to some degree, but what is the state of SBA lending today?
So I think, that's a great question. The last year or so, it was a little challenging just with the interest rate environment. But I would say within, probably the last 6 to 8 months, I think the volume has definitely picked up with the program, particularly first quarter this year. It's been pleasantly, it's been very, very active. So
excellent.
Yeah.
I mean, typically when you start seeing layoffs, across the country, and it's kind of what prompted us to start ours is we just got tired of the corporate, acquisitions and just doing the same old thing for other people that, you get laid off. You're like, well, maybe this is my time to start up a business.
Right.
And I guess it comes back to your resume of what kind of experience you have with running the business, the type of business it is. But franchises seem to be very popular when it comes to making that decision because you have that support culture and everything. And then I guess it'll help you get the SBA. So who knows? We may see a big influx in startups.
Well, it's interesting that you say that because a lot of times, particularly with the franchises, a lot of times the applicants that come are, they're coming out of the corporate world, whether it's, they received a retirement package or they were laid off. They're coming out of the corporate world. They have money to invest and they're looking for that next step.
Right.
I'm, too young to retire. But I do, I have capital and I want to put it to work and I want to put myself to work. So maybe I'll look into acquiring buying into a franchise.
Yeah.
Very, very common profile with franchise that I have noticed with franchise lending is, a lot of corporate people from the corporate world. So
and I noticed, sorry, Jeff, I noticed, I know you talked about your verticals and stuff, but what franchises, what industry franchises are you seeing that are very popular for these folks that are starting them up?
I would say, definitely what they call QSR, which is quick service restaurants. That's a popular industry. And then, just the retail, I do a lot of pet retail franchises. And There's so many different types of franchises. I would probably have to say the quick service restaurant is one of the most common that we see. So.
Gotcha.
Good question, by the way.
Thank you.
Yeah.
I come up with them every once in a while.
Right. So you mentioned the personal guarantee that the owner or 20% owner has to sign. What about in the franchise? Does the corporate franchise organization are they also required to sign some kind of a personal guarantee or some kind of a guarantee if the franchisee fails?
No. So the guarantee is really between it's between the franchisee and the bank. So yeah, the franchisor is not really involved in the financing component. Between the lender and the franchisee. So that's really it's really quite separate.
Okay.
Yeah.
I've got one last question on the SBA side of it. From start to finish, what's an average timeline before getting a check in hand?
So we did a study or a review of all the loans that we funded last year, and I believe the average turnaround from start to close was about 43 days.
Okay.
And that's average.
Right.
Typically from an industry standpoint, I've worked for a few banks a few SBA lenders over the years. I would say to anticipate a time frame between 45 and 60 days from start to closing.
Okay. Well, it sounds like it's a little shorter than traditional funding, even alternative finance.
Yeah. And obviously, these are all averages, so assuming everything goes well, I think it's, that's a safe average to say.
It seems like the SBA program would be a top priority first on your list. I think it would have to be up near the top.
Yeah, it is. In fact, like as I mentioned before, it's really the bank's main focus is SBA. I mean, that's really, that's what we do here at Live Oak Bank is SBA lending. We do have some, conventional products that we offer, and we do have a couple other different products that are, not SBA. But yeah, I mean, our main focus is SBA lending. So all over the country.
Yeah, so we work with a lot of contractors in our business. A lot of it is workers' comp driven because they either can't get it or they're having a challenge with it. I see on your website that you guys, loan to the construction industry. What types of contractors do you like? What's that process? What are you looking at there?
Great question. So here in Florida, I see a lot of contractor deals. I've got a couple right now that I'm working on. Got a flooring contractor, glass contractor, HVAC contractor. So with contractors, our biggest concern is we want to make sure that there's not a significant concentration with new home building, new construction. Obviously that's a very, very cyclical, business in nature. And so, with with the contractors that we look to finance, we want to make sure that there's no reliance on new construction. If they do a lot of remodel, renovation, that's where we like to play.
And what do you see those typical loan amounts? Are they typically smaller contractors or?
I mean, I would say the loan amounts are anywhere from $1 million to $3 million.
Oh, really?
Yeah.
And that's not part of the SBA loan, or could it be?
No, that is. These are SBA loans. Yeah.
Okay.
Yeah.
I mean, what size company would that be, revenue wise, that's borrowing that kind of funds?
I would say probably anywhere from 2.5 to 5 million.
Wow. Okay.
Yeah.
And they're typically using it for, materials, maybe a certain product that they want to carry.
Well, so these are business acquisitions that I'm referring to.
Oh, okay.
Yeah.
Okay.
But as far as a working capital loan, I mean, we can look to offer working capital for, if you have a company that wants to grow, whether that's adding employees or, looking to, invest into different markets. We can absolutely look at working capital loans.
Okay. Yeah. That was kind of why my response was,
yeah.
So when they're just looking for a loan to help grow their business, what's the size loan that they're going for in there?
I mean, probably $1 million or lower.
Okay.
Yeah.
Okay.
Pretty good. Any final thoughts on the SBA loan structure, the whole SBA topic? Even if it's promoting Live Oak Bank, that's fine. That's what we're here for. But any final thoughts on the SBA alternative?
I would just say that it's a great alternative, for all the reasons that we had, kind of gone through today. Being able to lend unsecured, having that lower down payment to preserve your capital, getting a longer loan term. Again, it really boils down to just preservation of capital. Live Oak Bank, we're the largest SBA lender in the country. We can lend. We actually can lend up to about $7.5 million unsecured. The one thing that I want to mention is we have what's called a combo loan program, where we'll take an SBA loan, which caps out at $5 million, and then we'll do an additional we can do up to an additional $4 million in a conventional, what they call a conventional pari passu loan. So is that essentially you have two loans, but the terms are mirrored, so it almost feels like one loan. The term of the conventional loan is going to mirror the term of the SBA loan. So with that being said, we can actually lend up to $9 million, and up to $7.5 million of that can be unsecured. I don't know any other lender that can offer that. They may be out there, but most SBA lenders typically cap out how much their unsecured component. They usually cap it out at maybe $2 or $3 million. So this allows us to get involved in some of those transactions that are, maybe not so much Main Street, but maybe even lower middle market, just because of the size component and what, the availability we have to lend. But that's a unique Live Oak product.
Yeah. You and I met at an ACG, the Private Equity Association event not long ago in Sarasota, Florida. Do you find that private equity and their portfolio companies are often looking at lending?
I actually don't. I don't think, I think the challenge that private equity has with the SBA program is the personal guarantee requirement.
Oh, yeah.
The PG requirement, it's always been a challenge, and I think it always will be for private equity. Investment bankers, private equity, there's really, I don't think, in my experience, has never been a great fit for those individuals. Those businesses.
that personal guarantee thing, that's pretty interesting. How sticky is it? I mean, if I sign a personal guarantee and something goes bad and I don't have the resources to cover the personal guarantee, how sticky are they? I mean, you walk us through, if you can, some of the
So
implications of the personal guarantee.
yeah, I really I really can't comment on that because I'm not on the workout side. Um, I don't know if there's a negotiation involved in that in a liquidation scenario. But it's a great question. I wish I had more intel on you for that for you on that. But that's really more a question for somebody in a workout group.
Yeah, we should have asked Larry Pino that the other day. He's a business lawyer. That was probably a question for Larry. What do you do in a situation where there's a personal guarantee and the guarantor can't handle the obligation?
Yeah, I mean it's got to be I guess pretty popular because you just see a good percentages of business fail,
Right.
and
Right.
I'm sure they have financing of some sort. So
Yeah.
well,
Excellent.
good.
All right.
Yeah, I don't have anything else. I did learn a lot about the SBA program. Man, if I had a business and I need capital, the SBA avenue would be, it would have to be number one on my list, simply because of the requirements, the availability of the money, the amount of money, the terms. Just getting around the personal guarantee. If I'm comfortable with that, it seems like my path to capital raising is pretty strong on the SBA side.
Yeah, I would definitely agree with that. At the end of the day, it just comes down to access to capital, the ability to get that capital out to the Main Street, businesses.
Yeah.
So, yeah.
Well, Jeff, really appreciate you taking this time with us today. Stick around after we're done with the recording.
Okay.
I got a couple of things I want to talk to you about.
Yeah, sure.
But if you want to close it out.
Yeah. So look, this is kind of what we are building with Crossroads Consulting. We look at companies from the start, the moment they come off the whiteboard, right, all the way to exit and all the points in between. So what we try and do is bring experts such as yourself, Jeff, to the table so that we can be a resource for businesses directly. We work with companies that on their outsourcing needs, helping companies grow, helping companies protect their assets. But then we have the ecosystem surrounding Crossroads Consulting. And that's where you fit in. That's where a lot of the experts that we've been interviewing. Obviously, you can go to our website. The link is below. We also have a YouTube page, XR Consulting, and you'll see all of the different interviews that we have. But there's a lot of good information from a business operations perspective, business ownership perspective, and what you're providing, Jeff, is right along those lines. In fact, I will be talking more about SBA lending to business owners that I come in contact with who are looking to raise capital, because to me this is it's a great source, could be a lifesaver for certain businesses.
Right. Yeah.
Very good. Thank you very much for your time. We'll connect. I'm sure we'll run across each other at other ACG events. And if there's any questions that anybody would like to ask, go ahead and submit those in the comment section. We'll make sure that you get connected to Jeff and Live Oak Bank.
All right. Thank you, Jeff.
Thank you so much for having me.
Once again, we are Crossroads Consulting. I'm Jeff. He's Billy. We're available to talk to you about any issues that come up with regards to your business. Our business model is to help you find solutions. There's no cost, there's no obligation to talk to us. You've seen some of the interviews that we've done. We have a lot of resources that we can bring to the table. We welcome you, the opportunity to talk to you about your business and some of the challenges that you're facing now. We'll do our best to find the solutions. Again, there's no cost, no obligation.